Okay guys, welcome to this week's first lesson. Today we're going to do a bit different than usual. We're going to talk more about trading psychology and a few other things like trading plan development, and a little bit of back testing, and then I'm going to give you guys some tools, and I did draw up a PDF for all the notes for what we're going to go over today, so I'll share that in resources. And then I have made my own, and I've been using it for a while, my own back testing spreadsheet. I'll show you guys how to use that. Let me just see if I can find it quickly. And then also I have my trading journal I want to give you guys as well for free on resources. You can just I'll send you the link to my Google Sheets and add it to your own Google Drive. So let me just find these spreadsheets. Sorry, just give me 2 minutes, guys. I should have prepared this. Just have to log into my Google and shit. Okay. Here's the back testing spreadsheet. I'll explain how to go through it, etc. You get a little graph here. Your percentage wins and everything. We'll go through that just now. I have to log into a different Google to get my trading journal. My trading journal. My old one, so I'll just show you guys. I have edited this a bit in my new one. How do I duplicate this row? Can I? Yeah. Teach you guys how to fill in all of these. But yeah, let's just start at the beginning. I wanted to chat to you guys about developing a trading strategy, trading plan, and doing your own back testing today. Because if you're new to trading or an experienced trader, you know the importance of having a plan and making sure that it works for you. So yeah, today I'm going to go over that a bit. I do have a PDF of all these notes that I'm going to put down, but let's get into it. The reason we do this is because No plan. If you don't have a plan when trading, basically you're driven by your emotional results, okay? That means if you go into any trade or trading environment and you don't have set out rules for yourself, then we get driven by market action, okay? We see the likes of candles going up at a rapid rate and we buy at the top of the candle, and then we see price come back down and we chasing results, okay? We chasing that how can I say, that bit of adrenaline rush that we get from entering in a trade. You see price must be going up now, but we've got our rules in place for this exact reason, that we want to follow a set guided rules, that 3-step plan I gave you, the double entries, double confirmation. So no plan equals emotion driven results, which never ends well and never helps you move forward. We've got to think of trading as trading like a robot in sorts, okay? So we have to create a detailed, organized plan. I've given you guys an outline of how I trade, but what I want you guys to do with what I give you today is actually go in and do your own back testing. Look at how you can even improve on it and create your own organized plan. I will not enter a trade until these steps are entered. Print that out, stick it on your wall in front of your computer, make it your wallpaper on your phone, and then we get objective results, okay? And we journal our results, okay? By journaling our results, we know, okay, now these aren't emotional results, these are objective results using a strategy and using our detailed, organized plan for trading. This is where your beginner traders blow their accounts, because nothing is organized and it's all emotional driven and it's never traded like a computer. You got to remember, we're trading with algorithms here. They don't trade on fear of missing out or any of those emotions or greed or anything. So our trading plan should be reviewed frequently and summarized. So at the end of every week, I want you guys to go through your trading journal when you start your demo accounts and you start trading. Journal your trade, every trade, and every week on a Sunday before I do the market breakdown, you should go through, click on it, see where you made mistakes and find out, okay, I'm finding, for instance, why you want to go through your trading journal. You might find that, okay, every week all my winners have been from longs and 50% of my losers are from shorts. So people see the markets differently. Like some people might be able to spot shorts better than longs. So then you know your weakness. And then I would say for the next week, you would identify why you lost those shorts. Do some more back testing, do some more practice. But for the next week going forward, avoid all shorts in the market until you're confident that you've fixed your mistakes in shorting the market. Okay? So that's why a trading plan and a trading journal should be reviewed all the time. Your trading plan should be reviewed every month, okay? So you look at your results and your trading plan together at the end of the month and you break it down. You're like, okay, now I've fixed my shorting problem. Let's look if there's anything I'm making wrong in my trading plan or anything I can improve on in my trading plan to higher my risk to reward ratios. So your risk to reward ratios are your stop loss to your take profit. You'll see here your risk to reward ratio, the smaller your stop loss, the bigger your risk to reward, and the bigger your take profit is compared to your stop losses. That's your risk to reward, okay? So you must look at your average risk to reward per trade, your entry times as well. Am I entering around news? Okay, you can then go and look, okay, I lost this trade. Go back on Forex Factory and see, oh, CPR data came out there. That's why I lost that. So now you know, avoid this time when CPR comes out, etc., etc. So this is how you optimize your trading plan. So then you would say, in my trading plan, avoid trading NASDAQ during US CPR data. So I've done this over years and years and years. This is why I tell you guys to avoid those hours and exit positions before those big news events if you're in profit. So I've learned those mistakes, and you guys need to start doing that yourself as well, because I can teach you what I've done, but there's no better way of learning than learning yourself. And you don't want to learn the hard way. You want to take your losses on the chin, but every time you take a loss, you must ask yourself, why did I lose? Because that's how you're going to become better as a trader. You're going to objectively look at it. Was I a robot in this trade? Was there any outliers outside of my trading plan that caused this to lose? One, was I emotional? How was I feeling that day? Did my girlfriend have a fight with me in the morning? Things like this can mess with your emotions and your mental psyche. Did I have to take my kid to the doctor? Things like that. Then you'll learn, okay, on days like that, avoid trading, etc., etc. This is why I avoid Fridays as well. For instance, I saw that a lot of my trades that I was losing in a month over a year, something like 15% of my losses were on a Friday, and only 6% of my wins were on a Friday. Now, as a mathematician, that's less than half of my trades are profitable. So for me, I'm thinking avoid Fridays and I'll be more profitable. So that's what I do to avoid losses. Sorry, I just ordered my girlfriend something on Uber Eats. Let me tell her it's here. Yeah, so exactly. Don't hope, trade your plan. So I hope that makes sense to you guys. That's just a little intro. So secondly, I want to say, for the majority of your time trading, this is what you must spend your time on. So manage your time wisely when you have your time to spend on the charts. I know some of you guys work 9-to-5s and you don't have all day to look at the charts, or Matthew, you don't have times at certain hours because you're working and it's all. So when you do have the time, don't spend countless hours on analysis without a clear objective or premise to it. So are you back testing now? For the next hour, I'm back testing all pairs. That's what I would say to myself at the beginning. This is my time. I've got an hour and I've got a clear objective. I'm back testing for an hour to come up with a plan or better my plan, or go over my trading plan for the month, or, you know, better my short entries because of my plan and my journaling. I can see I've been losing out on shorts. And then you should spend most of your time, set quality time, on the higher time frames of your analysis. A lot of people will go into, say, the weekly and spend 5 seconds here. Okay, cool. No, spend most of your time weekly, daily, 4 hour, 1 hour. This is where most of your time must be. Because this is where the market's moving, okay? This is where the holistic economy is moving in a certain direction. So spend majority of your time, quality time, on the higher time frame. And remember, you've got to carry that analysis down in the lower time frames. So nothing significant occurs without first leaving telltale signs on long-term basis, monthly, weekly, day one, 4 hour, H1 charts. So this is where your majority of your time should be when analyzing charts. Okay, this is my trading time, my allotment time. Okay, guys, makes sense? And then on the other side, let's look at the least important processes. Number one is a big one. Well, obviously this is all about money at the end of the day. That's why this is got a different dot. Don't focus on the money, okay? Yes, trading is about making money, but the only way to make money is to focus on the process of trading and not the greed and the money amount. As I said, you can start with 100 Rand and build your way up. It's about building the process, building the robot within you, think of your brain as an AI machine learning supercomputer. That's what you got to think of. What does a supercomputer not have? Emotions. And what does money bring out in human beings? Emotions. Okay. So the further away you get from your emotions, aka the further away you get from focusing on the money, the less you care about the money. In fact, if I could say it bluntly, the better trader you'll be. Like, it's just numbers on a screen at the end of the day. If you follow the process, when you lose a trade, be like, okay, I lost the trade. Every trader loses a trade. Now, what would the supercomputer do? It would analyze why it lost that trade. Was there something influencing that loss? Was I at the right entry? Did I follow my plan? Blah, blah, blah. So these are the processes you've got to get into to become that ultimate trader, that AI supercomputer. So don't focus on the amount of money you hope to make. There's no guarantee you're going to make it on every trade. Don't say, okay, I'm entering a 1 to 10 here. I'm risking 1,000 Rand. I'm going to make 10 grand. And 10 grand is what's in your head. No, think process. I've entered my trade. Where's my stop loss? There's my take profit. Don't focus on the money. Don't even think about what money you're getting out of this. After you get out the trade, that's when you can be like, oh, good trade. I made the money. Now, don't worry about the losses as well. Every trader will lose. Every trader will lose. Yes, it stings the first couple times, but you got to remember, this is a long game. A long game. Over 100 trades. You first need to get 100 trades to know your net win, net loss ratio. So try and be the supercomputer that doesn't get emotional after the loss. Don't, when you lose, automatically get into the market in the opposite direction because you want to chase that stop loss that you just lost. No, a supercomputer would not do that. Don't worry about missed trades as well. The market is going to be here for many years. Some markets like BTC open 24 hours a day. Every week there's going to be multiple setups. Look at all these pairs there are. There's going to be setups. And you know what? You wake up tomorrow, if it's not a Saturday, the market's open again. So don't worry about missed trades. And breaking that down a little bit more holistically, if you miss a trade and it's gone, say this was your entry here that you wanted to get in, but now price came up, you missed it, you were at gym, and now price is down here. Don't now enter down here. You missed the trade. Okay, cool. Next trade. Let's focus on the next trade. Now we know, okay, set up your proper alerts. Make sure even if you're at gym, you're alerted. You can go step off the bench for 5 minutes, go sit by the Kawhi and just look at the trade. Okay, I'm going to enter. Boom. Then set and forget. That's another thing I want to instill in you guys. It's not in here. I should put it in here. But a nice rule is set and forget. Once you're in the trade and you've got your stop loss, set and forget that trade. Obviously, if you're looking for a draw on liquidity on the downside, maybe once you're in the trade, when you know, okay, we're going down and you want to break those lows, set an alert at the lows when it breaks the lows, and then see, okay, cool. Now I'm waiting for my lower time frame change of character. That's when I know, okay, the market's going to switch now. That's when you watch the market. Set and forget otherwise. Don't watch price go up into your stop loss and now you're feeling emotional, and then that's what brings the emotions. If it hits your stop loss, you're going to be feeling cuck. But if you set and forget and you come back the next day and you see it took your stop loss, oh well, you weren't stressing the whole time. You went on with your day. So the least important process in trading is the entry signals. Okay, what I meant about this is don't worry if you miss a trade, basically. Like if you miss that alert, that's not the biggest thing about trading. The biggest thing about trading is following the trading plan and executing. It's not about, oh, I missed a trade. If you miss a trade, so what? So yeah, keep yourself grounded and understand what you're doing. Don't focus on the little things, basically. Keep focus on the plan and work the trading edge your method exploits. So every trader, we work towards finding an edge in the market. Otherwise, we'd be gambling. If we're looking for a 70% win rate with an average take profit of a 1 to 5, that is an edge on the market. If you're a supercomputer and you got your entries right, you don't matter that you've lost a couple trades, you've lost 30% of your trades, you've missed a couple entries out of 1,000 trades in the year, you've missed 20%, 30% of them, you only 700 trades, you're super profitable. You've got to remember that. Next. So the general overrule is bring the pieces together in building your trading plan. The fundamental, so what your fundamental analysis is, your Forex factory. Is there big news coming out that could move the market? Your technical analysis, your smart money concepts, 3-step entry criteria, your order blocks, your fair value gaps, everything I've talked, that's your intermarketal analysis. It goes together in building a trading plan. So trading plan, my trading plan is 1, in the morning, Forex factory, look at news. 2, technical analysis. My technical analysis I do on a Sunday. I set my levels of interest, etc. Oh no, where was I? BTC. So I've set my levels of interest and stuff. So I've done my technical analysis. Now I'm just waiting. So that's what your trading plan is. Then how do you enter? That's part of your trading plan. So impeccable risk control is the first component to any successful trading plan. How do you have impeccable risk control? It's impeccable discipline in when you enter. Okay? If you don't follow your process, you won't have the right risk control. You'll lose trades. Now you're down to a 50% winning ratio. You're closing trades early. Now, instead of a 1 to 5, you're a 1 to 2 trader. Now 50% of your trades winning, and you're a 1 to 2 risk to reward ratio trader. Guess what? You're breaking even, but half of the time you might even blow an account. Depends on what you're risking to get into the market. Flawless equity management is essential to every successful trading plan. Okay, so you got to think of yourself as an equity manager. You're managing that little bit of money you put into your broker. That's why I told you, deposit, trade, withdraw. So at the beginning, if you lose your trade, your stop loss is hit. So you got your deposit in your account, you got your holistic money in your wallet, and then you've got your deposit in your trading account, and you just lose that 100 Rand of the 1,000 Rand or whatever it is. That's good equity management, okay? So if you get into a trade short here and your stop loss is above here, but then you keep moving your stop loss, that is not impeccable risk control or flawless equity management, okay? Fundamentals at any measure can assist a trader in his trading plan development, okay? So understanding the news, understanding when big news is coming out, watching the FOMC meetings with Federal Powell, the Fed chair Powell, understanding what he's saying. So do you guys know like the correlation between interest rates and interest lending rates and inflation? Do you know how when inflation goes up, they have to rise up lending rates for inflation to come down? Then when lending rates come down, inflation comes up, and how this cycle affects the market up or down. Those type of things you need to start learning and getting involved in. I will teach a bit of that in tier 2 as well, on how inflation and the rates and stuff like that by the Fed, etc., influences the market. The reason they raise lending rates is to bring down the cost of goods. But then once lending rates are high, people can't afford goods, so inflation goes down. Their money is spent on paying off debts, credit cards, cars, houses, bonds. So they have less money to spend on goods. So the demand for goods and services goes down. So inflation goes down. That's the correlation between those two. Technical analysis and a comprehensive approach to sound tolls and concepts is the frame. So when you have your concepts like smart money concepts, that's your frame for your trading plan, okay? So work to exercise a trading plan, understand the tools you are using and stick to them. Never veer from the plan. If you're trading 1 week smart money concepts and then next week support and resistance, and then the next week an EMA crossover, and then next week RSI divergence and stuff like that, you're never going to have a consistent trading journal for you to look back on, because you're not following a trading plan. So you can never improve yourself as a trader because you're a fly-by-night. As they say, you're meant for the streets, you know what I mean? Like girls that are meant for the streets, you can't keep them. Traders that are chopping and changing, stick with one girl, marry that girl. That's what your trading methodology is. Smart money concepts, we're learning that, we're going over that. So you're married to it now, you're married to it, and you get yourself better at it. Because if you change now to support and resistance or something like that, which I believe doesn't work, because we've learned about stop loss hunts, liquidity, etc., market trades from liquidity to liquidity, you'll see you're just gonna blow accounts because you don't have the trading plan, you don't have the technical plan all in place with your risk to reward ratios. And that's how people swim around trading for years with no direction and no profitability in the end. So again, executing a top-down analysis with all the above components will deliver optimal results while consulting risk, managing your risk. Okay, AI supercomputer, we understand. You guys can see I did some work today at the coffee shop. Okay, a paradigm shift in your mind now happens. Remember, you're not the only predator in the market. The only way that these big banks, etc., make money is by taking out the 95% of us, 98%, whatever the stat is. So remember, act like a predator when you're in the market. Look for that liquidity grab. Where would the other people put their stop losses, etc. Where would even put it this way, where would your dumb emotional self enter the trade, exit the trade, get stopped out? Take your old mentality and switch it. Become the predator of your old mentality. If you were a trader before this, let me say that. If you were unprofitable, emotional trader before this. When you're confident going in or developing confidence, understand overconfidence is counterproductive. This is a big one. So when you guys get to that stage where you start winning and you're feeling good and you feel invincible, remember that feeling is always the pride before the fall, okay? You've heard that saying, it's a cliche, but it's true. Pride before the fall. Remember, your ego is your biggest enemy, because once you become a supercomputer, ego is the next emotion you'll feel that takes over, where you start thinking you're invincible. I can do this. Oh, I can over leverage now. I can put 20% into a trade now. I'm going to win no matter what. And then you fall into the trap of being emotional again. Never assume your well-designed trading plan won't hit a losing streak. Every trading plan in the world will hit a losing streak due to fundamentals in the market, etc., etc. Let's say tomorrow the US goes into full-blown war with Russia. A lot of things can happen where you might start going through a losing streak, okay? But at the same time, that's why we have the trading journal. We reflect on the losses. Why did I lose? Oh, US bombed Russia today. I shouldn't have entered that trade, etc., etc. You're going to go through losing streaks. Every trader does it. But that doesn't mean that over the month you're not profitable, you know? Over, say, a week, you might not be profitable, or a couple days, or a couple trades. It all depends on your state of mind. It could be something that you're going through in your life. Like Stu, I don't know if I can say this, but he's got a wedding coming up. Trading around a wedding. You might think you're not emotional, but you could be greedy, looking for extra money or something. Not saying that Stu's going to be doing that, because I know him, he's not that person. But yeah, that's just what I'm saying. So everyone can go through a losing streak, and don't let it get you down. A good thing to do if you hit a losing streak and you feel in a slump, give yourself a couple days break. Don't look at the charts. Come back fresh on Monday the next week. Gotta make some cash to pay for the booze. Great advice though, bro. Lekker, bro. 100%. But yeah, and then, as I say, always reflect on your wins as a victory. Celebrate the victory, every win. When you get that win, go take your girlfriend into that bedroom and say, it's my time with you now. There's nothing you can say. You know what I mean? And take your losses as a learning opportunity. If you take that loss, say, okay, I'm going to spend the next hour, I'm going to work late tonight. I'm going to find out why I lost that trade. I'm going to go back test that situation in different pairs. Be that accountable person that just says, fuck this, I'm going to learn from this. I'm never going to lose like this again. When you start flipping your mentality to this, celebrating your wins and your losses, treat them as a learning opportunity and say, I'm going to fucking learn from this and I'm never going to make this mistake again. That's when you start getting from that 60% win rate. Now you're 70% win rate in a couple weeks. Now you're 75, now you're 80, now you're 82% in a year, now you're 83% in a year. That's how you keep going and growing and exponentially growing your account. It will take your preparation advance to weather periods of inevitable drawdown. Journal your results, both good and bad. Self-explanatory. I've said it. Journal, journal, journal. And then you will see you did the preparation. Now you know inevitable drawdown periods that every trader goes through. Don't look at it as losses or a continuous losing streak. I should take losing streak out there. It's the drawdown period. So just like a market goes up, there's a drawdown period somewhere in there to then go up again. Drawdown up. As long as the general direction is up, you still here. Let's say this is year 1 or month 1, month 2, month 3, month 4. After 4 months, you're still profitable. But then you might look at month 2. Oh, I'm still where I was last month. Then month 3 comes. Halfway through month 3, you go through a little period of down draw, and then end of month 4, we're looking Gucci. But preparation will help you learn from those inevitable drawdowns with your journaling, your trading plan, and your process. Do not overdrive your trading plan or attempt to trade outside its trading plan. As I said, don't after 1 week of 7 trades now switch up your trading style, saying, oh, now I'm going to enter from the fair value gap instead of the order block because a couple trades have come there and haven't quite reached the order block. No, stick to it. There's a reason it hit that fair value gap, but maybe at the end of the month now you can say, okay, now I'm going to back test. Every time it missed that order block, I'm going to back test that fair value gap, including the trades that I did, and I'm going to see if now, instead of waiting for that order block, now I enter at the fair value gap and I just have a wider stop loss. Would I be more profitable or would I have the same amount of money? Back test that and see. And then you can upgrade your trading plan instead of just after 7 trades changing it without any purpose behind it and any planning behind it and any back testing as well. So then every great trader has one thing in common, and it is respect and understanding that risk will always outweigh the reward unless it is properly managed. It is not about the profits. So I told you, it is not about the profits. It's about how good you are at managing your risk and being a supercomputer and, you know, just attacking the market as a predator rather than the prey. And now I just wanted to say that you got to look to the future, okay? After you get this trading plan, etc., we know there's things called prop firms. And this is my goal, to get you guys funded by prop firms in tier 3. So tier 3, we're going to go through a prop firm challenge together. I'm going to do the challenge with you and get another prop firm account. I currently have 2. I did blow a third account. I had 3 at the beginning of last year, but I blew that account because I went for a Hail Mary trade on it. But you see, I've learned from that and I've put in my trading plan now. But at the same time, it was getting a bit much managing 3 prop firm accounts. So I think I'm going to do the prop firm account challenge with you guys, but then I'm going to give it away for free on YouTube or to one of the mentors or something. Mentees, sorry. I'll give it away for free. So you know it's a 2-month challenge. First month, you need to make 10% with nothing over, I think it's 8% loss on the account at one time. And then the second month is 5% win with nothing over 8% loss. And then you trading with it, whatever account size you go with. But my whole point was for this mentorship is I want to see you guys take 100 Rand to 1,000, and then 1,000 to 10,000. And then that 10,000, that 10K will give you a $100,000 challenge. So if you pass these 2 stages, you then will be funded $100,000. So in saying that, that fucked up. In saying that, here's a little, this is my trading plan with these prop firms. So I pack small, play big. 1% risk or less is enough on these accounts. So when I start on these accounts, I risk 0.5% because I don't want to go into that drawdown into this 8%. I want to go down 0.5% if I lose my first trade, you know? But when I'm funded, I risk 1% every trade. So I risk $10,000. And then if I win my first trade, $1,000 I risk. Sorry, that's 10%. I risk $1,000. Say I'm a 1 to 5 trader. I earn 5,000. Then the next trade, I risk $1,050. You know what I mean? So I'm compounding the account, but I only risk 1% at a time. So the question is, will you always be in the developing trader's mind? How can I make a fortune with so little risk? Well, if you make 10% a month on $100,000, or let's say you have $100,000 in your account and you're trading like this, 10% a month is nearly 200,000 Rand. Now let's just say you don't withdraw it, or you withdraw it from the funding, but now you start 10 months in, you've got your own 100K. Now let's just say you don't withdraw 200K a month. If you need to spend money, you spend 50K a month. That 150K will compound this $100,000 account in a year to over $2 million easy. So that's how 1% risk in a trade can change your life forever. Proficient, constant traders focus on the reality that their trading will not be perfect. So risking 1% of $100,000, you can risk, let's say, $10,000. You have 10 trades. You have 10 trades if you're a 1 to 5. If you lose 9 trades in a row and you get a 1 to 5, you back up to 95K. You get another win, you back up to 100K. You can lose 8 out of 10 trades and still be profitable, if you think about that. Or you can lose 8 out of 12 trades and 10 out of 12 trades and be break even. So you can make all the money you'll ever need risking 1% with a prop firm. Trust me, guys. Trade a prop firm account for a year. You can get bigger accounts as well. Like at the same time with these prop firms, if you get 10% a month for 3 months in a row, they upgrade you to $150,000 account straight away. I've got one of my accounts upgraded to stupid money. Then another 3 months later, you get, if you earn 10% a month, now you're on a $200,000 account. Because you got to remember that if you're a good trader, they want to give you more money because they're risk managers themselves. So if you win consistently a month making 10%, they're going to give you more money. And now 10% a month is 15K, which is 300,000 Rand a month. Then 400,000 Rand a month. And you keep stacking that into your own account. You make your own broker account and you keep. So there's also things called copy traders. So this is how I enter multiple trades on multiple accounts. You've heard I've got multiple brokers and then I've got my prop firms. So I have a copy trader on MT5. I'll teach you guys that in tier 2. So you can have multiple accounts and it automatically works out. So I say 1% risk on all accounts. I enter my entry and my stop loss and it works out my lot size for me automatically and enters a trade. So that's what I'm saying, 1% will make you enough money to last a lifetime. But obviously with your small accounts, your 100 Rand, your 1,000 Rand, risk 10%. If you blow 100 Rand, you don't really care. But if you make a 1 to 10, you doubling your accounts. And then you also doing your compounding rule where you work out 10% of what's in the accounts and you keep adding. That's how we're going to get to the 10K to then trade the prop firms. So you're probably wondering, how do I make my trading plan? So let me lay it out for you. So the steps for creating your trading plan is 1, define your goals. So we know our goals in this system is, first we need to learn, okay? Right now. You guys need to do back testing. You guys need to do practice trading. And then we're going to take 100 Rand to 1,000 Rand, 1,000 Rand to 10, and 10 to prop firm challenge passed. And then, oh, one more thing about the prop firm. When you pass, after the second month, you get your 10K back. They pay you back. It's basically like a deposit, if you think about it. But do you know how many traders fail this part here because of what's up above that I've explained? They probably get 1,000 people a month losing. So they make 1 million Rand a month of people losing, which affords them to then give people like us, the winning traders, their capital to trade with. And they keep 80 to 90%. I mean, we keep 80 to 90% of the profits we make. And they keep 10 to 20%, depending on which prop firm you're with, of the profit. So it's like, it's paying them a monthly fee, or it's paying them a fee to borrow their money to make the profit, if that makes sense. There's all the rules and stuff I'll go through in tier 3 with us before we start those challenges. But yeah, ask yourself what you're trying to achieve with your trading and why. So you might have a different outlook. You might not want to do the prop firm trading. You might have 100K of your own money. So what I would say in that instance is, then I would trade 1,000 Rand with a 1% risk, how we're going to trade in tier 3, and practice that way of trading. So we're only risking 10 Rand a trade, and see if you can take the 1,000 Rand or the 100 Rand and slowly compound it that way, because you've got capital. But I'm pretty sure everyone wouldn't want to pass up on free money trading with prop firms. Step 2, research and analyze the market. So now you know your goal. Research and analyze, back testing. Look at the historical data trends, different types of trading strategies. We know our trading strategy, smart money concepts, and decide, okay, we don't need that. So I'd say is to research and back test. Back test the markets with smart money concepts. Step 3, set realistic expectations. Make sure your plan is realistic and achievable. Don't set yourself up for failure by setting unrealistic goals. Don't chase the quick money. Basically what I've said above. Step 4, create your plan, document your trading, and make sure it includes everything you need. So I've got everything you need here for you guys. So don't worry about that. The only thing is you need to write out your trading plan. So this is my homework for you guys, to write out your individual trading plans, please. So I want you to go on a Google Doc or something and say, my trading plan is to take 100 Rand to 1,000, 1,000 to 10,000, 10, get funded by a prop firm, 100K, consistently making 10K a month. That's the holistic out view of your goals. Now, step 2, research and backtest the SMC concepts using this backtester I'm going to give you. While you're trading your your do your back testing, see how you want to enter the market, etc. I've shown you how to do it. I've given you the notes. Back test it, do it for yourself. Because if you don't do it, when it comes and shows itself, you're gonna be unprepared, okay? Think about a cricketer. When he goes out to bat against the fastest bowlers in the world, how many hours has he put in the nets facing a bowling machine or bowlers like that person, bowling the same speed as him over and over again? That's what you should be doing in your spare time, is back testing, and that way when the position does present itself to you, or the signal I give you guys and you see it's coming into a zone, or your alert comes up, you've been there, done that, got the t-shirt. Been there, done that, got hit in the head by many bounces before. You've hooked it for 6 many times before. So you know exactly how to do that back foot across, smack the shit out of it, hook that guy for 6. Hook the market for 6. So you need to do your back testing with the SMC concepts I've given you, the 3-step, step 1, 2, 3, etc. Go do the back testing. If you guys don't know how to do back testing, let me show you. I did show Warren in one stream, but if you have a look here on, this is unfortunately only for pro users on TradingView. And I think if you are serious about trading, you need to make the investment of getting TradingView Pro. It does help a lot, but you can go to the replay bar here. What I would do is, so I would just go into a random pair, USD Mexican dollar, and I would go like this, random point in time, without looking. Okay, I'm here, replay here. Now, look at the markets. And from here, candle by candle, down here, you can move forward. Candle by candle, look for your setups. Okay, we're looking long, maybe in this order block here. But we had the change of character. We have a weak high here. Maybe I go long here. Not saying I would. Probably wouldn't. But now we've gone long. You know what I mean? We maybe chase those highs. Not a good risk to reward ratio. I wouldn't get in that trade. But now, also, that's in the daily time frame. Now you go in the 5 minutes on that time frame, and you look in here. You know what I mean? Okay, we could have seen a different trade in here, maybe a long here, etc., etc. And then every trade that you do, you put into this back testing system here. Let me just get back to my writing. So that's how you back test. Then, yeah, don't set yourself up for failure saying I want to take 100 Rand to 1,000 Rand in one trade tonight. You know what I mean? You guys need to trade demo accounts, I'd say, for at least the next 2-3 weeks. Fill out your trading journal along that way. Get yourself to at least 15 trades. Set out your trading system and do at least 100 back tests, I would even say. You see how many you can do in here? It shows you how many back tests I've done before. All these numbers I've put in here. Yeah. We've done 1,000 back tests before. Obviously on a smaller time frame though. But yeah. This is what I did for like the first 2 years of when I was trading, guys, is so much back testing and journaling. So let me take you through filling out this this back testing form here quickly, and your trading journal, and then I think we're done for today. I'll post a PDF going over all the notes I wrote down for you guys. But how are we feeling so far? Like, let me just see if you guys have any questions before I move on to the technicals of these backtesting stuff. Just type in the chat here in the classroom. Remember, where you have joined the server, there's a little open chat button. Give myself a little break from talking, my mouth is sore. Or you guys can just unmute yourself. Keen to do the backtesting sheets and breakdown, like a stew. Matt is typing. Warren, get a question in there or something. Matt, get a question or unmute. I want to involve you guys more in these lessons.
Mind-blowing, absolutely mind-blowing.
Lovely, Warren.
No, it's so cool. It's really cool. I'm the text is a bit small, but I'm 48, so my eyes are a little bit like I've got my glasses on. But
yeah, I've got it all in a PDF for you. I'm gonna post it in resources.
I know. I'm not very computer literate, so I just need to spend some time. But this is awesome. This is so fucking awesome, really.
Like a Warren.
Okay, but I wasn't.
How's it
Just hold on, Matt.
No, I'm
hold
out
on,
of
Matt.
it.
Are you good, Warren? You done?
Yeah, I'm all good.
Oh, you are.
Really,
Like
really good. How's it, Matt?
How's it, bro?
Yeah, this guy's a legend, eh?
He's yo, bro. This is literally a lifesaver.
Yeah, I know. I'm with you. I just love this shit. It's like I've been screwed so many times, like just with stop losses. But anyway, that's another story. But thanks very much for everything, Jared.
Pleasure.
Take it easy. Cheers.
You too. Maddie, go for it.
Bro, the prop firms is absolutely mind blowing as all day.
Yeah, it's crazy.
Do they fund you initially? So they only take 10% of what you earn, or?
Yeah, so I can break it down for you guys. We can look at my Forex funds. I've got one account with them. So basically, when you first do your initial 2-month trading, they give you a demo account and they watch your trades, okay? And you have I'm not going to log in because then you'll see my account, but you have a dashboard where you can track your losses, everything. They've got everything in there for you. So here they have 5% daily drawdown, but then a 12% overall drawdown. So they've got a lot more. So then you can lose up to $12,000 before you fail the challenge. So if you have a look here.
So, bro, if I go below $12,000, for example, they will take the rest of that money away from me, and then I'll have to start.
So your 10,000 Rand or your $749 to register. So I think that's like 15K on my Forex funds. You won't get that back. But if you pass the 2-month challenge, you get that money back, and then you get funded with them $100,000 live account. Yeah.
That's mad.
Oh wait, this is a different one. Sorry. Let me just go to FTMO because this website's putting me off. Yeah, so FTMO is the same. And what I was going to say is, yeah, you get your money back and then they give you a live account. And then if you fail, your money's gone, unfortunately. But we're going to get you guys funded. And so you see, you get it's 540 euros, and then refundable fee. You get a refund at step 3 when you become a funded trader. Do you have any other questions, Matt?
Not for now, bro, but I'll mute myself if I do. Shot
Yeah,
brother.
and then you receive up to 90% of your profits, and they cover the losses as well. So if you're on a live account and you lose the drawdown, you don't have to pay them that back. They take the hit.
Is there a certain amount of trades that you have to take in that time? Or is it as long as you're profitable?
Different prop firms have different rules, so we'll go over this in tier 3. There's lots of rules that I'll take you through. Like with FTMO, you can't trade within 5 minutes of a news event, 5 minutes before and 5 minutes after. So something like an FOMC, if you have an open trade during that time, your account automatically gets liquidated. So there's certain rules you have to follow that are unbreakable as well. So we trade within a framework, and we adjust our trading strategy and our trading plan in accordance to the rules of an FTMO, MyForex funds, etc., etc. So they actually are a lot stricter on you, which is better because they want you to be a profitable trader. So they've done all the analysis on the market. You know why they don't allow you to trade during FOMC? It's the same thing I tell you. Don't have a position open because you're going to lose a lot of money, because FOMC, the market will be doing this, and then the market will go boom, boom, something like that. Now, because the markets move so rapidly up, if you've got a stop loss here, your stop loss isn't going to be taken out here. I can guarantee you it's not. It's going to be taken out somewhere up here. And they, as a company, if your stop loss here is for $10,000, up here it could be $100,000. They could then lose $100,000 because you were open during an FOMC event. So I hope that makes sense. So they're helping you with these rules to be a better trader as well, because you've got more of a knowledge base, because they've gone through it with thousands and thousands of accounts. So they don't allow you to lose all their money, because they can't get out of the position. Even if you lose your 10K monthly allowance in one trade, you're not going to get out of here in the market, because the market moves so rapidly. None of these orders get filled because price automatically jumps up to here without any of these orders being filled. So that's why they have all these rules, and I'll take you guys through those. I think that's questions over. So what I write here, smart money concepts, and then you say your instrument. Let's just say we're doing NASDAQ. On the time frame, we're saying we doing the daily time frame. Minimum stop loss, you don't have to put that. Put in your test dates from like the 1st of the 1st 2019. Oh, this is today's date, sorry. You put today's date in there, your start dates, your end date of your trading range, where you're going to back test, and then it'll tell you how many days have been taken. So let's just go 1st of the 1st 2019 to the 2nd of the 12th 2022. 1,138 trading days. The trading hours, so for me, I would break that down from 10 a.m. to 6 p.m. Chart layout, so in TradingView, you have the ability to save templates with your indicators and your chart layout. I don't use any indicators anymore, so this was when I was using indicators and back testing indicators. I put my chart layout name there. So system 1, you take a percentage of a profit at TP1, TP2. So initial capital, let's just say we want to test a $100,000 account, our FTMO. Risk per trade, 1%. Don't worry about this, it's because we haven't put this. So here's your TP1 on the left here, and your TP2 on the right here. So you can have different TPs if for different strategies. Say your trading plan is to take 50% off at a fair value gap, like above or below price. So I could just say, let me think about this quickly. I'll just go TP1 100%, back test that way, to be honest, but let's just say at 50% there, TP2 at 100%. But then your TP1 can be variable. Let me teach you how to do variable TP. So in here, so -1 is basically if you hit your stop loss. If you're using a 2 TP thing, you have to go -1%, -1. So that is your stop loss hit. But if you break even, you put 0. Your position 1 was 50%, you put 1. Okay? And then your TP2 didn't get hit, but you moved your stop loss to break even. That then would be your break even. Okay? But now let's say it hit position 2 is there. Okay? Oops. That's why that went like that. So now we'll see the numbers. So let's say we took 50% off. Okay. TP1 winning 100% total trades 1. Yeah. Okay, yeah, this will work. So we risked 1%. We took 50% off halfway, and then position 2 was at 100%. That's a 1-to-1. So now let's say the trade was a 1-to-5 risk to reward ratio. How you check that is here. So we did all trades 1-to-5. Remember your risk to reward ratios in here. Let's say everything's a 1-to-5. So then we had put 5 here. And then in here, we took at halfway 2.5. Boom. So we risked $1,000. We took halfway off at 50%. We took 50%, we took 50%. You put 2.5 if your risk to reward ratio is 5. And then position 2, you got a 5. So position 1 results, you would have earned 6.25. Is that right? I don't think that's right. No. 1 at 50% and 5. There we go. 5.5. No. Sorry, I'm just trying to work out where the take profit is. Okay, this is probably... You see, I don't do a 2... So we're just going to do this. Just do a 1 TP. Sorry, guys. So we got a 1-to-1. Yeah, would be 1,000 winning. So now whatever your TP is here, now you type it in. So if we were 1-to-5, we type in 5 here. And we won 5,000, okay? Now let's just say trade 2, we lost. So we hit stop loss -1. Now trade 3, we got a 3.2. Then we got a 4.8. Then we hit 2 in a row stop loss. Then we hit a 7.4. Then we hit a loss. Then we hit a break even. Then we hit a loss. Then we hit a 10.1-to-1. You can see how it draws out your equity curve here and your positions. And you can see your results happen here. So every time it will risk 1% and work out. So this is your back testing spreadsheet, okay? Oh, here's your risk to reward here. Sorry, I'm dumb. So if you want to use 2, you can go 50%, you'll take half, and then 100%. And then your TP1 is at 50%, TP2 at 100%. Yeah, that should work now. Yeah. Yeah, it's working now. So that's how you do a 2TP setup. Okay. And then you can have additional testing. So you can do two pairs at once. So then you put in your date of that trade, and then your instrument you traded. So NASDAQ, all of these trades. Now you can add an additional pair. So let's just say gold. You add on here, you do your stop, as I said. You can do additional. So you can do gold here, you can do silver here. You can do AUD CAD here. And then you just type in AUD CAD here as that test, and you go in date. So now you do 10 AUD CADs, and it'll show you your equity curve. Okay, and then yeah, this is a good way to backtest different pairs, and then just say your different systems. So SMC1, I'm only going to go for the daily, and then 30-minute change of character in OBs, order blocks. Boom, you test it out. So I'm going to share this with you guys. This is the backtesting template. And then let's just say we lost fuck tons in a row. You can watch your equity curve on the right here come down. Can you send us all the text for the trading plan and other crucial... Yes, bro, I've got a PDF. I'm posting it. I know you put in the work, and I found out lots of serious value and everything tonight. Unreal. Yeah, bro. In resources, I've got it in a PDF. I'll show you guys here. I know I closed it already, but yeah, I'll put in the PDF for you. And then I'm putting in this backtesting link. So when you guys get this, you won't be able to edit it. You have to go File, make a copy, yeah, and then copy of it, and then save it to your own drive, and then you'll be able to edit this and edit into your own positions. Otherwise, it will be locked on your Google Sheets. Otherwise, you can, I think, download it as an Excel spreadsheet. Yeah, the Excel spreadsheet, and then you can use it in Excel for you old school guys that like to use Excel offline. Okay, and then into the trading journal. So yeah, in here you type your risk to reward. That okay, let's just start on the left. Position 1. These are the trades that you're going to take on your demos now, boys. This is where you note them down. Okay, 1, base. What are you trading in? Is it USD? Is it ZAR? I strictly trade in USD, but I've got overseas accounts, that's why. What pair? Screenshot URL before the trade. So if we open an old trade of mine, so this was in the trade, but anyway. Oh yeah, because I had to change to 2 before and after. So before the trade, let's go here. So before entering the trade, you'll set up your short position here. Let's just say with that and that. You haven't entered the trade yet. Let's just say price is up here, somewhere around here. And hypothetically, you're getting in there. In the top right corner, you click this camera button, and you say copy link to chart, boom. That will always be there. Now you paste it in here. This is for future reference. Paste it in there. Now, let's say a trade came in, boom, 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 went all over the show, went to Mars, and then still hit TP. Now, copy. Put that in trade after. Was it a loss? Wait. L and S. What does L and S stand for? Oh, long or short. Did I go short? I went short. Time frame. What was the time frame? Daily. What was my risk to reward? 5.51. 125.51. How much did I risk in the position? 1%. Entry date, time. Self-explanatory. Price came in there. 5th of April, 2023. I'm on the daily, so I don't care about time. 5th of April, blah, blah, blah. Time of exit. Size. Just keep that on 1, because that'll reference your risk to reward ratio there. Then your gross profit and loss. Wait, size has something to do with this, I think. No, it doesn't. Yeah, so just keep size 1 for the algorithm in here. Gross profit and loss. So then now you go to your broker and you see, okay, I risk 1% for 5.55. I made $5,510. Financing. What was your overall cost to enter that trade? So for me, my commissions on something like that would be $50. But I wouldn't put it under financing, it would be under commission. Boom. So my net profit and loss was 5,460. Results. Did you hit target 1, 2, stop loss break even, stop loss partially, stop loss? It's self-explanatory. Target 1, because we only had 1 target. Now, you write a little note. What did Jared say? Messed up on moving the take profit and deleted 1 stop loss and 1 TP. NB, learn how to add stop loss and take profit on Finamark. That's when I was trading on Finamark. I was trading contracts. So this is your contract size. Okay, so I understand. So what was your entry size for that NASDAQ? Remember, you use your sizing tool. So let's just say we're on 100,000. We risk 1%, and this was our NASDAQ trade. Calculate. Trade unit size, it was a 0.4. So our size was a 0.4. I need to make this able to do dots, okay. There. 0.4. Let me just drag that down. Oops. Whoops. So now you'll be able to do 0 points. And let's just go another decimal. There. Gross profit and loss, commission, blah, blah, blah. So that's why I had financing, because when I was doing that, they'd take $1.01 off every time you entered. Cool. So now you do that for all your trades. Now you can go through your trades at the end of the week and see, okay, go through all your losses. So you sort by profit and loss. Or sort by stop losses hits, etc., etc. So then you can see, okay, let's go through all my losses. Let's go through before the entry. What can I see? What happened before the entry? Blah, blah, blah. So everything I told you about, talked about later, this is what you can then use to go back and look at your trades. Okay, I entered at 10 a.m. Now I can go to Forex Factory and see, was there news at 10 a.m. on that day? Open up your calendar, go back, etc. So this allows you to be that AI supercomputer by gathering your data on your trading. And then your backtesting system is your future proofing of your systems. Giving yourself that data, because we know AI needs a lot of data to predict the future, or ChatGPT trolled the internet from 2022 to its start on learning how to speak like a human with all this knowledge, etc. So these are your tools of your trade now, guys, that you can use. Okay, does anyone have any questions on these? I'm sure once you got them in your hands, you'll have a little bit of questions, etc. Just put them in the general chat. Remember, don't share this with anyone. You paid for this. This is me giving back to you. I don't want people in the general chats of just this Discord getting this. So if you have questions about this, put it in the general chat in tier 1 or the resources tab, and I'll get back to you. If you're having trouble, I'll record a little video teaching you how to go through it, etc. But yeah, guys, thanks so much. You can unmute now, say goodbye, ask a question, anything.
Thank you, bro, for the lesson, eh? This was a flipping lekker lesson.
Lekker, bro. Hope you enjoy the tools and do some back testing for us.
Bro, I also had a question. When you did use indicators, which indicators did you use?
Bro, I did lots of back testing on lots of indicators. I don't use them anymore.
Okay.
They don't work.
Okay.
You know why? It's because there is a lag between indicators and the market. So every indicator will tell you when to enter, but it's too late. They're lagging indicators. They can't predict the future. Yeah. Whereas with smart money concepts, we can sort of predict the future because we know where liquidity is being grabbed and where liquidity is going to be grabbed. So yeah.
Okay. Sharp, bro.
Lekker.
Thank you for the lesson, bud.
Pleasure, bro. Everyone do homework. Do lots of back testing. This is your homework now. I won't check it on Wednesday, but I'll give you guys a week. Next week, Monday, I want to look at, let's say at least 20 to 50 back testing results you guys have done. Warren, any questions before I go?
Yeah, Jared, I think I need some time with this back testing. It's
okay, cool.
It's a lot of information to process. But
100%.
Yeah, I've got to put the time in. It's just a bit difficult. But,
okay, well, just find yourself around it. Yeah.
Yeah, I've never seen this stuff before. I mean, it's quite. I just didn't know it was around.
Yeah. No, I completely understand.
But I'll spend some time and
to put in the work now.
Yeah, I know. I'm a slow with the computers, but I'm here to learn.
Yeah, everyone learn it at their own pace, as I said. This is a once-off paid thing. It's not a monthly subscription thing, so you guys can progress how quickly you want to progress. I would just like to see in a week everyone can spend at least like an hour or two just maybe even doing 10 back tests and just learning how to use it. You know what I mean?
Right. Yeah. It's more like, it's more just learning to, what it's all about.
Yeah.
It's quite a lot of but it's all like trial and error, or whatever you call it.
It's putting in the reps.
Yeah.
Yeah.
But shit, I'm excited. You got so much information, and you just putting it out there. It's amazing. It's really
awesome. Thanks,
I wish
Ryan.
my mind was just a lot faster. I could just process this shit.
But that's why I'm recording these lessons as well. So if it's going too fast for you, we do only have, I think, let me look at it. 5 or 6 lessons left in tier 1 that I want to do. And then it's just going to be basically repeating the same content and going over it together.
Okay,
until
cool.
we get into tier 2. So if other people are faster and they progress to tier 2 and you want to stay in tier 1 just to get everything right, that's 100% fine.
Yeah.
The content is still there.
Yeah, I just want to allocate the time to it's quite well as kids, it's hectic.
I understand. Everyone's got their priorities and stuff. Yeah.
I'm doing. Yeah, this is what I'm doing. Like I've got a lot of investments to do. So
yeah, 100%.
Make sure that I get it right. But
yeah.
Awesome. Thank you so much, Jared. It's so fucking good. It's really
pleasure,
good.
Bro. You gotta think of it like you're learning a degree part-time at the same time.
That's right. Exactly. I do.
So you're not gonna get 100% on your exams after 1 month of learning.
Sure. Yeah. Well, you're gonna see.
Yeah. Okay. Awesome. Thanks, Warren. Thanks, Matt. I know Stu said goodbye. He had to go. But thanks, guys. This was a great lesson just to chat. And yeah, hope you learned a lot.
Cool. Thanks. Take it easy.
You too. Cheers, eh? Bye.